Good evening, all. Ira Epstein of Linn Associates with your SPDR ETF wrap-up, and this is for the evening of Thursday, September 30th, 2021. Well, what an evening. We already saw President Biden has signed the bill that was sent by the Senate, first then to the House on to the President to keep the government open through, I think it's December 2nd. We'll see if there's going to be a vote or not in the House of Representatives to pass the infrastructure bill that they've had on their hands from the Senate for quite a while. If Ms. Pelosi, we'll call her Wonder Woman for lack of a better term, but she does a pretty interesting job. If you bet against her, you're a fool. If she allows the bill to come to the floor, it's going to pass. If she can't get the votes, and here's what she's doing tonight. Do you really want me to be your enemy? I need your vote. We need you to do this. Well, the problem that she's getting right now is we've seen Joe Manchin, and you know that already, say that he is solidly against a $3.5 trillion bill in the Senate. It only takes one senator, but there's another one there too that's on his side with that. So if the progressives in the House agree to the infrastructure bill, what leverage are they left with to get the reconstruction bill where that's all of their goodies? That's where they're at. That's the dilemma she's facing. I'll let her figure it out. I'm no politician, know nothing about it, but I'm a darn good chartist, and that's what I watch. So if we look at Microsoft, still tanking away, but everything tanked away just recently. You've got the pattern of lower highs, lower lows, and this is an important day. Why? You have an outside day down. If you take out the high of an outside day down, the day after or the day after that, within 2 days, then it's a bear trap, and you often make a run to the closest moving average, okay? We'll see if and that would be above you. It could also be, if it happened below you, you look at Bollinger Bands, but I'm not seeing that right now. So this is where you're at. The Bollinger Bands, I haven't shown them to you, but there's the main moving average because the 100-day is under you and the 200. When we take a look at the Bollinger Band, well, to get up there, you're already over that number at that point. So that would be my target, which would also fill in some gaps in the chart. I am not saying that will happen. What has happened is you have an oversold market that is running the lower Bollinger Band, approaching the 100-day average of closes, a major number that hasn't been hit in a while, and that's where I'd be looking for the market to make it stand, if not in this general area. That's why I look at that outside day. In Apple, just an ugly trade day, not going much of anywhere. Is it going to embed? So we take a look here. It could. We'll see if the market wants to do that. This is September 30th. I don't know why they've already gotten some of these charts October 1st. That is not me. That is the charting service. But that's where it's at. I see that as the problem there. If you take a look at ARC, lower highs, lower lows, running this number, look at how much this has fallen. Remember, they had a lot of exposure to China. And with that exposure, China's got problems. If you looked at copper prices, copper's down because of what? It's not that the Chinese don't want to manufacture. They don't have any energy. And when you don't have energy, you start closing down things. So I own a company. I'm going to make XYZ things. Oh, I got a call from the government. I got to cut back on my usage. So if I don't want to, I guess there's a wonderful jail I can go to because that's what happens. So you're going to cut back your production. That means you don't need as much copper for certain durable goods as you can imagine, and away you go on that. And that's what's going on. What about mall operators? They've been told to close at 4 o'clock. 4 o'clock in the afternoon. They don't want them to blow out the energy. President Xi has said, you are not going to have rolling blackouts in this country. Guess what? You will not have rolling blackouts in China. There's no democracy. This is communism. And that means you do it or you have a serious issue and you will go to jail or worse. That's how it works. When we look at the industrial sector, with all that I just told you, why would it be up? You just keep coming down, but you hit a big numbers. You hit again the 200-day average in gray, and you hit the lower band. You hit the band back here in the 200. It went right back to what I call the line in the sand. As a chartist, and if you're a moving average chart with them, a moving average specialist, which I think I am too, you learn that certain key numbers are neutral points on a chart. Remember, a moving average is a backward-looking indicator, not forward. It's not telling you where a market's going, but it helps a lot because it can tell you where resistance should be seen or support. And that's what they do. It also filters out what momentum is doing for you, helps you with that. Well, when you're under the 18, you got downside momentum. Rallying up to it's where I expect to see the resistance more times than not. And when you hit a Bollinger Band fresh after getting down and hitting it on the upside, I look for a failure, come back down to it. I look for a failure on the downside. I haven't changed my opinion, and no, that's not October 1st. September 30th is where we're at, so I'll have to watch this. I don't run the charting services, as you can imagine, but somebody's got something in this charting service that's very wrong. Higher high, lower low. If you take a look here at the XHB, lower highs, lower lows, same thing, but you're under the Bollinger Band. How often do you stay under a Bollinger Band? You know, I tell you all the time, 5% of the time. So the sucker play is to go short under that number. Yeah, because you're telling me the market's going to fall apart and everything's going to come unglued. I get it. But no, I don't get it. Because the odds are the market's going to bounce on you. It may not be tomorrow, it might be the day after, but it's not going to stay under that very long. It does not mean the number can't fall, and when it gets over it, it's still at a lower level. But understand that that's not the high percentage trade right here. See, this one's right with September 30th. Lower and low, higher high. This just started happening tonight, so I have no idea why this is going on with it. But no trend. If you lose the embedded reading with the red line closing under 79 tomorrow, watch out. Means you're probably going back into the combination first of the 100-day average, but more likely the 18. It must hold here. Emerging markets, as I've been telling you, I don't see what can make them go up right now. Everything's working against them, from a strong U.S. dollar, energy that costs a fortune, goods, if they make them, how do they get them anywhere? It costs so much money. It's just a rough time for them, and you see that in these charts, still very bearish. Then we get to GLD. Today was an important day. You'd been in a downtrend. Now, study this. Lower highs, lower lows. If you break the pattern by getting over that in a market that was it embedded? Let's look. Both numbers were under 20 yesterday. Both numbers under 20 the day before and the day before. Got it? Were they even there the day before? Yeah. So you've had three to 5 days. If you lose it with a reading over 20, watch out. You're probably going back to the 18-day average, close to 2303. Let's see if I'm right. I expect price in the 18-day average to hit it. But more important, you broke this downtrend. This leg is over. Now, I'm not smart enough to tell you, is an up leg developing? We'll have to look on the weekly charts, but we'll do that tomorrow. When I come to the gold miners, well, they're still in the downtrend. You haven't gotten over this number, nor have you lost the embedded reading. So the market is in the gold that is the one that's losing the trend. We seem to be hanging back in the miners saying, okay, is that for real or not? That's what I think is going on. TLT, now we've got a situation where you've got the 200-day average under the 100. So it's a funny setup. You've got the longest term average down here, then the 100, and then the 18. If prices were over, everything would be bullish, but it's just layers of resistance now on the way up, and you're very oversold. This is not the place to be. Could I be clearer on that? And I am a bear long term on interest rates, but it'll be in another package of numbers. The euro currency, fully embedded. The gorilla glue trade, where you're just riding the band lower, you're waiting for a good rally. As long as you don't lose that red line over 21, the pros will probably sell this market on the first hard rally that you get an opportunity with. So you put it all together, you try to come up with what's going on, and away you go from there. With that, I'm Ira Epstein. You have yourselves a great day. I will catch you all tomorrow.